bags. Thanks for tuning in to Accounting is a Joke. I'm Dr. Who, and it's always my humble pleasure to add some fun in the fundamentals of accounting. Here on this platform, you don't need any boring textbooks or lame tutors as we chase the bags with this accounting information. Remember, gang, accounting ain't hard. It's really a joke, and I'm here to teach you the punchline. Bag. So let's talk about accrued revenues. The good thing about accrued revenues is that they are relatively easy to make as an adjusted entry. The definition pretty much sets the tone for the actual recording. So by definition, what is an accrued revenue? Well, it's a revenue that's been earned, but it hasn't been received from the perspective of the cash. So basically, we know that revenues you provide a service or sell a product. And so sometimes when we do that, we immediately receive cash in exchange for that, but sometimes we don't. And in those circumstances that we don't receive cash after the service has been provided or the product has been sold, then that revenue has been accrued. And so when no cash is involved after a product is sold or a service is provided, we have to set up an accounts receivable. And so whenever you have an accrued revenue, the revenue is recorded and a receivable is recorded as well. So without any further ado, let's take a look at an illustrative example of an accrued revenue. Let's take it to the board. Okay, so now we're going to take a look at an example of an accrued revenue. And by far, I believe that this one is the easiest adjusted entry for you guys because of the mere fact is A, you already understand what to do in terms of application. By definition, we say that accrued revenues are revenues that have been earned, but the cash has not been received yet. So with that being said, all that simply means is that we have to record a receivable as we record the revenues. And so let's quickly go through this nice, short, but sweet illustration of what an accrued revenue is. December 31st, it's a joke, perform work for a client, but not yet billed the $1,000 services. Couple of key words. Perform the work, not yet billed the $1,000 services. So we have provided the service already. Anytime we provide the service or sell a product, we have to increase revenues. So revenues must be increased. However, we haven't received the cash yet. So the fact that we haven't received the cash yet means that we have to set up an account to receive cash in the future. And we already know what that account is, gang. It's an asset that is called accounts receivable. So for this particular transaction, we're going to debit accounts receivable, thus increasing it for $1,000. And we are going to credit service revenue, $1,000. And that's it, gang. We've been actually applying accrued revenues from previous transactions. Now we have the appropriate term to identify it with. So with that being said, that wraps up accrued revenue, gang. So if it's making sense for you, don't forget to like, subscribe, or share the channel with your friends for more ways to chase the bags. And as always, it's been my pleasure, and I will see you soon. Bags!